Warren Buffett, the Oracle of Omaha, one of the richest people in the world. There's little argument that Warren Buffett is the greatest investor of our time. Even Warren Buffett, however, has his off years. Throughout his career as the CEO of Berkshire Hathaway, Buffett has had 10 years where Berkshire Hathaway stock has dropped. Considering that he took over in 1965, that's a pretty incredible stat. One year, however, really stands out. Let's look at the year when Berkshire Hathaway's price dropped by 48.7%. If you enjoyed this video, please like it and subscribe. Berkshire Hathaway's stock has endured some pretty terrible years. Warren Buffett has led the company through a number of recessions, wars, and catastrophic natural disasters. There have been mostly good years, but there have been some awful years as well. 1999 was a bad year for Buffett and Berkshire Hathaway. People couldn't get enough of the dot-com stocks, and value stocks were tossed to the curb. In 1999, Berkshire Hathaway's stock dropped by 19.9%. 1990 saw a recession hit the United States, and Berkshire Hathaway suffered as well. In 1990, shares of Berkshire Hathaway dropped by 23.1%. The second worst year for Berkshire Hathaway under Buffett was a terrible year for practically everybody, as the Great Recession nearly resulted in the collapse of the financial system. Berkshire Hathaway didn't escape the carnage, as their stock ended up dropping 31.8%. These were all bad years for the company's stock, but they weren't even close to being the worst for the company while Buffett was in charge. In 1974, shares of Berkshire Hathaway dropped by 48.7%. Buffett has stated in the past that if you plan on being a buy and hold investor, you will likely have to endure at least a couple of times in your life when you suffer a 50% drawdown. 1974 was one of those times for Buffett and Berkshire Hathaway, as shares of the company dropped by nearly 50%. To make matters worse, the S&P 500 dropped by 26.4% that year, so it was a severe underperformance on the part of Berkshire Hathaway. This was embarrassing for Buffett at the time, as he was really starting to make a name for himself, as he had recently been profiled in a feature in Forbes magazine. So what went wrong for Berkshire Hathaway in 1974? In short, everything. To start, there was a spike in inflation in the country thanks to the 1973 oil crisis, which began in the fall of 1973. The OPEC nations proclaimed an oil embargo in order to punish the supporters of Israel, which included the United States. Oil prices quadrupled in short order, causing an oil shock, which resulted in inflation and interest rates spiking. So things were bad for Berkshire Hathaway. Let's break down how bad. To start, Berkshire Hathaway's pride and joy, its insurance underwriting business, had a very bad year in 1974. The insurance business would prove to be a stable generator of profits for the company over the years, though 1974 was a bad year for the company's insurance business. Intense competition in the insurance industry in 1974 led to restrained premium growth, which helped to lead to underwriting losses at Berkshire's various insurance businesses. National Indemnity Company produced an underwriting loss after several years of high profitability. The company's reinsurance business produced an underwriting loss of over 12%, which Buffett would later call horrendous. In short, just a terrible year for the insurance business, which is so important to Berkshire. Berkshire Hathaway's basket of common and preferred stock dropped in value by 31.5% in 1974. These assets started the year worth $53.5 million in value and finished the year worth $36.645 million. The company's biggest position, 467,000 shares of the Washington Post, dropped in value from $10.6 million to $8 million. Other big positions that also dropped in value included California Water Service Company, Interpublic Group, National Presto Industries, and Munsingware Incorporated. To add insult to injury, the spike in interest rates led to short-term losses in Berkshire's bond portfolio. The company's bond portfolio dropped about $13 million, or 17.6%, in value in 1974. So, the insurance business struggled, as well as the company's stock and bond investments. 1975 would be another terrible year for Berkshire, as the company's stock returned just 2.5%, while the S&P 500 bounced back 37.2%. The next 6 years, however, would see Buffett absolutely crush the market. This streak would start a tradition of Buffett absolutely scorching the market after a bad year or two. One of the biggest reasons for this is that Buffett is a master of taking advantage of weakness in the markets to snap out wonderful companies at a fair price, as he likes to say. As Buffett also always says, be fearful when others are greedy, and greedy when others are fearful.